Hello dear friends. In this video, we will see how to prepare cash budget and also the production budget. So we will go straight to one problem on cash budget. From the following budgeted data, forecast the cash position at the end of April, May and June 2016. They have given you the sales, purchases, wages, miscellaneous expenses for the months February, March, April, May, and June. And they have given you the additional information. Sales, 20% realized in the month of sales. Discount allowed 2%. Balance realized equally in two subsequent months. Purchases, these are paid in the month following the month of supply. Wages, 25% paid in arrears in the following month. Miscellaneous expenses paid a month in arrears. Rent rupees 1000 per month paid quarterly in advance due in April. Income tax, first installment of advance tax rupees 25,000 due on or before 15th June. Income from investments rupees 5,000 received quarterly in April, July, etc. And cash in hand on 1st of April is 5,000. So they are asking you to prepare the cash budget, forecast the cash position for the month of April, May, and June. For 3 months, we have to prepare the cash budget for 3 months, April, May, and June. So they have given you the sales, purchases, wages, and expenses. And what are they saying about sales? So sales is a receipt. When you sell goods, you obviously receive money. So this is a receipt. Okay. So 20% realized in the month of sales. Now, what do you mean by 20% realized in the month of sales? If you are selling, your total sales is 1,20,000. Out of this 1,20,000, 20% of this. So 20% of this will be 24,000. You will realize it in cash in the same month. In February only, you will receive it. But because they have given 2% discount, so you will not get exactly 24,000. You will get 2% less. So you will get 98% of 24,000. So how did I calculate this? It is 20% of 1,20,000 into 98% will give you the amount of cash that you will realize in the month of February. So this is about 20% of sales. Okay. Now the remaining 80%. So the remaining 20%, you will receive it in the same month. But what about the balance? Balance is 80%. 80% they say that you will realize it in two subsequent months in equal installment. So the balance realized equally in two subsequent months. So now what we will do, we will make one small calculation for the sales. So we will know what is the amount that we will be collecting in the same month, and also what will be the realization in the subsequent months, the balance amount. Okay, so we will prepare one small working note. So in the working note, what is a working note? Cash sales and collection from debtors. So I've written the months February, March, April, May, June, and the total sales. So we know that the total sales for the month of February, sales is 1,20,000. How much money will you realize? You will realize 20% of 1,20,000. That will be 20%. That will be the amount that you will have to receive in the same month. But you will give 2% discount. Therefore, you will not get 100% of this amount. You will get only 98%. So you can calculate for each month like this. So it is 1,20,000 into 20% will give you 20% of the total sales. That into 98%. Why 98%? 2% discount. So if you do this for all the others, you will get what is your cash collection for the month of February, March, April, May, June. And we are preparing the budgets for April, May, and June. So these figures are relevant for us. So April column, we will write this amount. May column, we will write this amount. And June column, we will write this amount. So we will go and prepare the cash budget. So we will write this format. Cash budget for the months from April to June 2016. Particulars, April, May, and June. So what is the opening cash balance? Remember, we will take the opening cash balance. What all the receipts, we will write it here and we will add it up and we get the total. So opening balance plus all the receipts, you'll get the total. Then we will make all the payments. Payments, we will deduct it. After making the deductions, whatever amount you get the closing cash balance. So opening cash balance plus all the receipts in the month of April minus all the payments in the month of April will give you the closing balance, and the closing balance of April will become the opening balance for May, and so on. So in this case, we know the opening balance is 5,000. So 5,000 I will enter here. 5,000 is the opening cash balance. And what is your cash sales? In the month of April, your cash sales is how much? In the month of April, you will be collecting 15,680. In the month of May, you will be collecting 22,736. In the month of June, you will be collecting 17,248. So these are the collections in the month of April, May, and June. Now, this is only the 20% of sales. What about 80% of sales? So 80% of sales means 1,20,000 into 80% is you have to calculate in case of in the month of February, credit sales is 96,000. So this nine for other months also you have to compute it. So March, how did you get? It will be 1,30,000 into 80%. 80,000 into 80%, 1,16,000 into 80%, 88,000 into 80%. So how did I get this? It is the total sales into 80%. Okay, how did I get this? It is the total sales into 20% into 98%. Will give you these figures. Now, the credit sales, how did you get? They say that the balance you will collect it in 2 equal installments in the subsequent months. So if you sell in the month of February, in March and April, you will get this amount in equal proportion. So in the month of March, you will get this divided by 2. So 48,000 in the month of March and 48,000 in the month of April. So this 96,000, okay, the balance amount, how will you collect it? You will collect it in 2 equal installments in the subsequent months. So 48,000, 48,000. Similarly, what you have sold in the month of March, that 80%, you will receive in the month of April and also May. And then what you sold in the month of April, you will get it in May and June. Similarly here, this divided by 2, here also you will get this amount. And then this amount, 7,400 divided by 2, and you will get equal amount. So this working note we will prepare. Since we are preparing the budget for April, May, and June, the other months not necessary, only for the month of April, what is the collection from your debtors? You can check. It is 1,84,000 and 78,400 respectively. So April, May, and June, it's 1,84,000 and 78,400 respectively. So this is the working note that you have to do for the first part. So what is the collection? You know it is 1 lakh. So collection from debtors is a receipt. So receipt is 1 lakh. And the second one is 84,000 and then 78,400. I have taken the receipt. Now, Sales is done. So this adjustment is completed. Now, what is this purchases? Purchases is a payment. So it should come under your payments. So what are they saying about purchases? These are paid in the month following the month of supply. So if you were purchased in the month of February, the payment will be made in the month of March, because in the following month. So this month, if you purchase goods, next month you have to make the payment. So February's you will make payment in March. March's you will make payment in April. March's you will make payment in April. April's you will make payment in May, and so on. So in the month of April, what will be the payment? Payment will be for the month of March. The previous month's purchases, you will make the payment in the month of uh, April. So payment to creditors for purchases of goods. So how much? For you can see the note in the month of March, how much, what is the goods purchase? 1 lakh. So 1 lakh payment will be made in the month of April. April's, you will make payment in the month of May. And May's, you will make the payment in the month of June. So these are the payments: 1 lakh, 1 lakh 4,000, and 1 lakh 6,000. Next one, wages. What are they saying about wages? So wages. So this is also over. The first adjustment over, the second adjustment over. Now we are moving on to the third one. What do they say? 25% paid in arrears. Now, what do you mean by 25% paid in arrears? Supposing this month's wages is, say, February's month's wages is 20,000. Sorry, 10,000. I will not pay the entire 10,000 in the month of February. I will pay only 75% of for the month of February, and 25% will be postponed to the next month. So in the month of March, when you're making payment, you will have to pay 75% of 12,000. That is the month's wages plus 25% of the previous month's wages, because 25% will be deferred. So previous month's 25% you'll have to pay in the month of March, and 75% of the current months you have to pay. So wages, how do you calculate? In a very simple manner, I can write here one note to understand it better. I'll say 75% of current month's wages plus 25% of previous month's wages. Previous month's wages. So this is how you will calculate: 75% of current month wages and 25% of previous month's wages, because previous months will be outstanding. 25% will be outstanding, and that has to be paid this month. So wages for the month of April, how do you compute? How do you compute? It will be April. It will be 75% of 8,000 plus 25% of 12,000. So I'll write here 75% of 8,000. That is the current month's wages plus 25% of previous months is 12,000. So this is what the payment in the month of April. May, what will be the payment? May's wages is 10,000. So 75% of 10,000 plus 25% of previous months is 8,000. Next, it is 75% of 8,000 plus 25% of 10,000. So these are the payments for wages. Now, what about rent? So this is over. Now, next one is miscellaneous expenses. Miscellaneous expenses, they are saying paid a month in arrears. Month in arrears. That means February's miscellaneous expenses will be paid in the month of March. March's you will pay in the month of April. April's you will pay in the month of June, and so on. So in the month of April, in the month of April, you will be paying March's expense, that is 8,000. March's expense, which is 8,000. So 8,000, then you will pay 6,000 and then 12,000. So in the month of April, you will be paying for the month of March. In the month of May, you'll be paying for the month of April. In the month of June, you'll be paying for the month of May, and so on, right? So this is also done. Now coming to the next one, rent. Rupees 1,000 per month paid quarterly in advance, due in April. In the month of April, you will be paying uh, 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 rent quarterly in advance, quarterly, every quarter. So there are 12 months in a year, and there are 4 quarters in a year. So 12 divided by 4 will give you 3. So there are 3 months in a quarter. So a quarter, when I say quarter, it'll mean 3 months. So 3 months rent. So 1 month rent is 1,000. So 1,000 into 3 is 3,000. So this 3,000 rent, you will be making payment. Okay. So what do you do here? And you will be making payment when? In the month of April. For 3,000, you have made payment. So this is over. Now coming to the next one, income tax. Income tax, the first installment of advance tax, 25,000 due in the month of June. So in the month of June, you have to pay 25,000 income tax. So June month, you write 25,000 because you have to make payment in the month of June. Next one. So this is also over. Now this one is a receipt. Okay, income from investment. So these are all the payments, and this is a receipt. 5,000 received quarterly in April and July. So April, you will receive 5,000. Next receipt will be in July. So April, you will receive 5,000. July's you are not preparing. So if you are preparing July months also, that 5,000 would have come here. Do you understand? It's only for April, May, and June. So July, we are not preparing. So we are not going to take for July. Only for the month of April, we have taken. So now that's all. We have come to the end. We have come to the end. Opening cash balance, I have already incorporated in the budget. So now what should I do? After completing the entire thing, I have gone in order. All the adjustments I've taken care of. Now I have to find out what is the balance. So 5,000, and these are the receipts. So add 5,000 plus all the receipts, you get the total of A. So total is 1,25,680. Now from this total, you have to minus the total of your payments. What's your total of your payments? 1,20,000. So 1,25,000 is the total cash balance, and if you have not made any payment. But you have paid 1,20,000 means your balance will become how much? Your balance will become 1,25,680 minus 1,20,000, that is 5,680. So 5,000 plus all the receipts is 1,25,680 minus all the payments, you get 5,680. Now this is the closing balance for the month of April, and this will become the opening balance for the next month. So April's closing balance will become the opening balance for the month of May. So again, you will add it up, find out what is the total, and find out what is the total payment. So total of A minus the total of B, you will get the closing balance for the month of May. So May's closing balance is negative balance. So this indicates that you will have deficit cash balance. That means you need to make arrangement with your bankers for overdraft facility, because you will have deficit cash balance. You should have some arrangement with your bankers, or you have to make some arrangements, or you need to borrow some money uh, to have a positive bank balance, because the balance will become negative otherwise. Now this will become the opening balance for the next month. Okay, so add it up. You will get what is the total minus the total payment. So you will get the balance as, so even in this month also, you need to have overdraft facility with your banker. So this is how you will prepare cash budget. Now we will see how to prepare the production budget. So we will take the next question. This is on production budget. A company is drawing its production plan for the year 2002-2003 in respect of two of its products, Gamma and Delta. The company's policy is not to carry any closing inventory. So they will not have any closing work in progress. You know what are work in progress? Work in progress means semi-finished goods, partly finished goods. So they will not have any partly finished goods at the end of any month. Okay. However, its policy is to hold closing stock of finished goods at 50% of the anticipated quantity of sales of the succeeding month. Very important. You must understand the sentence carefully. Closing stock of finished goods should be 50% of the anticipated quantity of sales for of the succeeding month. Supposing we are in the month of April and then the month is May. Supposing in the month of May, you are expecting to sell. Okay, if you're expecting to sell sales in quantity, supposing 10,000 units you want to sell, that means in the month of April, you should have a closing stock, which is equal to 50% of this. So 50% means 5,000 you should have closing stock in the month of April itself. That's what we are saying. However, its policy is to hold closing stock of finished goods at 50% of the anticipated quantity of sales of the succeeding month. For the year 2002-2003, the company's budgeted production is 20,000 units Gamma and 25,000 units Delta. So they are saying for the year, for the whole year, the company has budgeted company's budget, if you see, production of Gamma 20,000 units and Delta 25,000 units. The following is the estimated cost. So this is the budget. This is what they have estimated. They have said that material cost per unit for Gamma will be 50, Delta will be 80. Labor cost per unit of Gamma will be 20 and 30 for Delta. And the manufacturing expenses per annum will be 2 lakh rupees and 3,75,000 rupees for Gamma and Delta respectively. And they have given you the estimated units to be sold in the first 7 months of the year 2002-2003. So they have given you the estimated sales units to be sold. That means estimated sales of Gamma and Delta they have given to you. And then they are saying prepare a production budget showing month-wise the number of units to be manufactured. So how many units should you manufacture? So we have to prepare the production budget. And then we have to prepare the summarized production cost budget for the half year ending 30th September 2020, not 2. So first one is, you know that opening stock, I'm talking about units, everything in units, opening stock plus production will give you the total number of units available for sale. So opening stock plus production in units will give you the total number of units available for sale. From that, if you minus the closing stock, you know how many units you have sold. So you will get sales. Opening stock plus production minus closing stock will give you the number of units sold. So if I want to find out what is production, okay, now changing the subject of the formula, you know this. So opening stock plus production minus closing stock is sales. So if I want to make production the subject, it will be sales minus plus the closing stock minus the opening stock. So from sales, If you take the opening stock to the other side, it'll become minus. The closing stock to the other side, it'll, because it's minus, it'll become plus. So sales plus closing stock minus opening stock will give you the production. So we need to prepare the production budget. So I will make one small statement in this particular form. That is, how do I find the production? I'll say estimated sales plus the closing stock minus the opening stock. I'll know how many units I need to produce. So I'm going to prepare one statement. Okay, so production is equal to sales plus closing stock minus opening stock. So production budget for half year ended 30th September 20, not 2. Everything in units. So gamma I'm doing first. So I'm saying budgeted sales or estimated sales. To this, I will add the closing stock. I'll get the total. From that, I minus the opening stock. I will get what is the units to be produced. That is budgeted production. So sales plus closing stock will give you the total. From the total, you minus the opening stock, you will get the production. How many units you need to produce, you will get now. So estimated sales, I will copy paste from the question. Estimated sales. See what are the estimated sales? I'm preparing for gamma. So estimated sales for the months April, May, June, July, August, September. So you have to copy paste here. So April, it's 900 units. May, 1,100 units. June, 1,400 units. July, 1,800 units. August, 2,200 units. September, 2,200 units. They have also given October, but we will not write October because we are preparing the production budget for the half year ended 30th September. Okay, now closing stock. So closing stock, when you are calculating, you have to read the sentence carefully. However, its policy is to hold closing stock of finished goods at 50% of the quantity of sales of the succeeding month. So what should be my sales in the closing stock in the month of April? I have to see the next month's sales. Next month's anticipated sales is 1,100 units. I should have closing stock, which is equal to 50% of May's sales. So 1,100 into 50% I should have as closing stock. So what is the closing stock? Closing stock will be 50% of the next month's sales in simple words. So how do you find the closing stock here? It will be 50% of June's sales. Okay, so that's what we have to do. So I will compute for all these months. So I'll repeat again. So next month sales, April's, how do you calculate? May's say estimated sales is 1,100, 50% of this. 1,400, 50% of that will be the closing stock for May. Similarly, July's 1,800, 50% is 900 and so on. Now for September, what should be your closing stock? You know that October sales is given to you. What is October sales? October sales is 1,800. So 50% of October sales, you should have closing stock here. That means your closing stock should be 900. So opening budgeted sales plus the closing stock, you will get the total. Okay. Now from this, you have to minus the opening stock. Now, what is opening stock? Very important. People get confused here. I just, for your understanding, I will write here March. So supposing if you are preparing for March, the closing stock of March should be 50% of 900 because the next month's estimated sales is 900. 50% of 900 will become 450. So closing stock of March will become the opening stock for April. So in other words, how did I get this 450? The 450 is 50% of 900. Okay. So in other words, it is 900. That is the month sales into 50%. So 50% of the month sales should be the opening stock, because previous month's closing stock will become this month's opening stock. So you calculate for all the others in the same way. So I've calculated in the same way. So from the total, when I minus the opening stock, I will get the budgeted production. And the total budgeted production of Gamma for this particular period is 10,050. Okay. Now, in the same manner, I will also compute for delta. How do I compute for delta? First one is, what is the estimated sales? Estimated sales, we know the estimated sales. It is 2,900, 2,900, 2,500, 2,100, 1,700, 1,700. So copy paste this: 2,900, 2,900. 2,500, 2,100, 1,700, 1,700. Remember, October's we are not taking because it's only up to September. Okay, so what is the desired closing stock? Desired closing stock is next month, 50% of next month's sales. So next month's sales means May sales into 50%. So that is 1,450. So this you have to copy till here. But for September, how do you calculate? You know what is October sales. October sales is 1,900. So what is 50% of it? 950. So add, you will get the total. And how do you find the opening stock? Opening stock will be the estimated sales of the current year uh, into 50%. So it is 1,450. So current year's whatever 2,900, if you're preparing for March, closing stock would have been 2,900 into 50%, and that will become the opening stock here. Okay, so this you have to calculate, and you will get the estimated uh, production of delta for the half year will be 13,300. So this part we have completed now. The first part of the question we have answered. Prepare production budget showing month-wise number of units to be manufactured. This is done. Now, what is the next one? Present a summarized production cost budget for the half year. So summarize production cost budget. Production cost budget we have to prepare. So how do we prepare the production cost budget? Summarize production cost budget for the half year. For the half year. So we know gamma, it is 10,050 units we have to produce. Delta, we have to produce 13,300. And what is the direct material cost? What's the direct labor cost? They have given to you in the question. Direct material cost is 50 per unit, delta 80 per unit, direct labor 20 and 30. And now production overheads, other manufacturing overheads, they have given 2 lakh rupees for the whole year. For the year 2002, 2003, in the whole year, you have to produce 20,000 units of gamma. So if you divide 2 lakhs by 20,000, you will know per unit how much is the manufacturing cost. Okay, 2 lakhs divided by 20,000 will give you what is per unit how much. Similarly, 3,75,000 divided by how many units of delta for the whole year? 25,000. So divide by 25,000, you will get what is per unit. So this is called the absorption rate. Okay, other manufacturing overheads, 2 lakhs divided by 20,000, you know what is per unit. You get 10 rupees and here it is 15 rupees. Okay, so 10 rupees is what you will get here. And here you will get 15 rupees. So since you know per unit how much, you can calculate now, because 1 unit it is 50, 10,050 units mean 10,050 into this. So you'll get what is the total cost. So 10,050 into 20, 10,050 into 10, you get this. Add it up, you get the total cost. Similarly, here it is 13,300 into 80. And you calculate for the others, you get the total. If you want to find out what is the total material cost, total material cost of gamma plus the total material cost of delta, add these, you get the total. So this is the production cost budget for the year ending 30th September 2022. Thank you for watching my video. Have a great day. God bless.